Hello guys, glad to have you on board again today. Quick updates on our stock indices and global market vision heading into the Fed. This is the first meeting of traders coming back at work after summertime. So it is generally, seasonally speaking, a very important meeting. This one more than another because of course it's the last one before the election and therefore it's going to be huge market catalyst, absolutely huge market catalyst out there. Lots of expectations from investors to the Fed. Once again, same old music. The reality is shitty and we're going to need the Fed to save our asses once again. So we want to have a peaceful mindset or heading into this thing. The Fed's going to save our ass. We're going to restore the bullish trends. We've created some supports out of historical highs. So yeah, everything's rolling as expected. This is exactly what I think people are expecting from this thing. But my personal assessment, it is, I don't know, it doesn't fit the plan this time. It happened once again, and I was the first one to say Fed will try and Fed will fail after this COVID thing. They cannot manage these things, whatever. They actually succeeded multiple times. They succeeded in here, they succeeded in here. So I would say central banks really saved the shit out of this coronavirus thing. It actually managed us to create a shitty bubble onto the tech sector, leading us to create absolutely pointless and worthless historical highs on the S&P 500. But I don't know what's down the corner. All I know is that this is the election time, and I doubt we have enough time to create a bull trend until then. Otherwise, that's just for the best case scenario. But I don't know. So many external factors are leading to some totally different possible reactions that I really wanted to stress that out. Let's just make a quick overview of these things. USD/JPY, if you really want to buy that thing, oh man, I don't know. It's so reminding me of the euro dollar, okay? Remember the euro dollar? Oh shit, sorry. It has been a real pain in my ass over the latest 2 years, waiting for this market to actually have enough breathe in, breathe out to work it away, and it actually has released all that energy within the latest few months in a huge trend, and people were fighting against it because it was too strong, whatever. But like I said, this was totally, first of all, expectable, and I doubt this is ever going to end anytime soon. There's still a lot to come, and the more people try to fight it, the stronger it gets. So the best we can get is just something like that, and there's still a lot to come. We're definitely going to fuck this resistance on euro dollar. It's just a matter of time. USD/JPY to me is exactly the same. We're going to fuck this level. It's just a matter of time, and when we'll do it, I suspect a lot of energy will release. Because yes, to me, these are the major trends. This is just bullshit, just like the bullshit we've had on euro dollar. Okay, this was the trend, this was the bullshit, and now we're trending back again. So the targets are fairly evidently on top of the resistances, just like USD/JPY has its target below this low point. So yeah, it's just a matter of time, and when this thing triggers, it's going to be a euro dollar like thing, or even worse than that. Because as you can see, historically speaking, we have some precedents out there that totally suggest that, I don't know what, but USD/JPY could have something. I don't know, but something's going to show up from Japan, and I can hardly stress that. When we're right into the squeeze, I've never seen such a thing, and all I know is that these things regarding the absolutely crazy tensions we have right now. I mean, we're dealing with recessions and historically high markets. We've rarely seen that, and this is just absolutely dangerous. So we'll see what comes down the corner, but I cannot stress how complicated this structure is. But I don't know. My sixth sense just basically tell me, Phil, don't follow the fuckers. Oh, do it very cautiously if you do it. But that's exactly what I'm going to be doing. I'm definitely not going to buy stock markets or eventually some individual stocks, just like I do. The ones I think will have mid-term to long-term potential. So if the shit really were going to hit the fan, I'm still willing to hold these ones for much longer perspectives. But yeah, gold and silver, they tried to break yesterday and failed. So this is not a good sign. Though I'm looking at how these things behave within the next 24 hours. Was this just an too much speculators type of pullback and we're going to rise afterwards? In that perspective, I'm willing to buy. Or was just the classical two sets of waves? All right, you thought this was getting started? No, man, we're going to go bearish, and we're going to try the downside waves 2 sets in a row as well. So I don't know. I just feel like the timing isn't appropriate. And therefore, I'm not really willing to go all in into these things, okay? What matters in here to me is the 30-year bonds behavior. We're sitting right into the middle of a range on a trend line, and that definitely doesn't look good. I don't think these things are going to trend follow, but this is still, of course, hard to fight against them because, once again, people have been brainwashed over the latest years into the thing that Fed has the market under control, don't fight the Fed, follow the trend, shut the fuck up. I doubt this is the future for markets. All I think is that that's the motive, that's the new paradigm, and I've never seen it ended so far, so I'm not willing to buy this crisis. Buying the opportunity of the coronavirus's downside prices, yes, of course, that was an opportunity. But in order to create trends, you need to create trending behaviors on the smart money. And I don't see any smart money investors being fully confident with this market. None of us is. None of us are. And actually, none of us are willing to buy this market with confidence for almost 3 to 4 years investment at least. So the only ones investing in this market are just the ones that says, all right, we're not going to fight, we're going to follow in the short term because that's the best we can do. And though all we've brought in is short-term money, willing to get in and out as instantly as possible. And in that perspective, this is not supportable investment for trendings to emerge. So yeah, I mean, I'm not willing to buy into this. I'm just saying I'm a mid-term to long-term investor looking at getting into the market right now. I'm also a short-term speculator, though this is totally possible right now. But there's nothing to do in between. The swing trades are totally dead because of this Fed control. And I'm just looking for the moment in which this thing will terminate, because I'm willing to buy the market, yes, but I'm not willing to buy a market under control because it feels fairly dangerous. And I feel like these 4 years of absolutely craziness in the market, specifically the latest 2 to 3 years, I think something huge is still down the corner. So I don't think we've seen all of it. Remember what I've said. Specifically, I think this is the VIX that's really rising the most of my concerns. Lots of people will say, okay, we're just down the latest few years. We've been used to this. This is the pattern in which, okay, Fed is down the corner. They're going to save our asses. Look at the VIX. It's already settled the game. The game is we're going to make a low point, and eventually later on we're going to have a new dip and stuff like that. But it's always going to be fine. I doubt this is the case. Remember what we said. We've looked at the triple log reduction of VIX, and my personal behavior. This is not the higher high on the VIX. I think we're going to go higher than that, higher than 88, higher than what we've been done with the coronavirus crisis. Though I suspect something very rare, so occasional that people don't even think about it. And I would tend to say that, yeah, I've already said about it. I've already talked about it. I think I can't stress how complicated that is to forecast very rare events, but all I know is that something rare and unexpected is going to show up. I don't know, flash crash would be one of the many ways. All I know is that USD/JPY will probably react and overreact in these conditions, probably because of dollar and yen in the same time. I don't know what gold and silvers are going to be doing. I'm eventually willing to short-term follow them rather than stocks because they actually have value, but I don't know. It just feels so wrong. So, yeah, until then, I cannot do something when it feels wrong to me. I'm just going to eventually try and follow the assets in which I have confidence into, but that's all about it. I'm definitely not going to buy stocks, but I'm not going to short sell without actual signals. So I had signals last week, and that's made it clear we definitely have things to deal with. We do have mature H1 timeframe trends, okay? So 4 contacts on the 15-minute boundaries, and in that perspective, if we ever go down the support, that's a breakdown that's going to show up. These things, look at how the trends were. People tend to believe that this is a pullback. All I tend to say is that this was an excessive market, and if we reverse it, don't expect any third range boundary. We're going to get these things we've talked about. We're going to have pullbacks to final excess, to pullbacks on the higher time frame, to final excesses, and so on. And we're going to go from bullish to bearish. So, yep, I'm sorry to say it. I have a plan. I'm following it. I don't know what's going to be the final outcome. Is the Fed going to save once again the investors' asses? Or is the Fed going to fail on this final exercise before the election? I don't know. All I can tell is that I had signals, I traded them. Okay, so of course I took half the position sizing because it's fed down the corner, and I know it can totally fuck up every possible signals until then, but I'm not willing to buy that shit once again. I don't buy it. I don't buy it. I don't know. Eventually it will work out and the shit will hit the fan later on. I'm just not confident enough to buy this market. So I'm going to buy side assets, like I said, individual stocks eventually, the ones I have true belief into for future market behaviors and the future at least 4 or 5 years investment in them that can absorb short-term volatility, but I doubt the VIX is actually pricing things like it should. So I suspect problem down the corner. Anyway, we'll see. So today I don't expect a lot of problems unless the Fed actually decides to change that, which would be totally stupid. I mean, they've been working so hard to get there during the crisis. They're totally not going to fuck it all up. So I expect the Fed to be totally accommodative, absolutely pleasant Jerome Powell down the corner. But I doubt the market is ever going to buy it. So I suspect the market is going to keep on contracting into this range. So as long as we don't get out of these boundaries, there's nothing to do. And I suspect we're going to stay there today. Probably a bit of volatility, a lot of jitters down the corner. But I don't know. Some things will actually get to trigger over the latest couple of days. So I don't expect anything rational today to show up, but just short-term stupid volatility. Okay, that being said, we'll see all about it. As long as we deal with the boundaries, don't overthink things, think about dumb zone and all of those type of things. And until then, just think about the fact that if we manage to reactivate these types of trends, then the next one is going to be even more stupid. Okay, so if this really is about a pullback, which I doubt it is, because just once again, I'm counting down the dips. 1, 2, 3. That doesn't count as a range. So if you want a range, you're going to need to have odd numbers of dips. So yeah, I don't know all of the rules I know and I always followed, just point out some more bearishness, but I also know that all of those rules have been totally bent over the latest couple of years with this 180-degree reversal from the Fed. So the Fed has put the market under control. We'll see all about it. Is it actually going to work one more time, or is it going to fail sooner or later? I don't know. I just don't want to follow this blindly. Bye guys.